Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. 3.3. That is where we are at this morning. Jeez, man, yesterday, like, by the end of the day, I was like seeing stars. I was just so burnt out. And then Janet Yellen came out and said the thing, which I was kind of expecting the whole time. I kind of felt like they had already done it before the session, but then like she changed her, I don't know. And there's this huge move down in the treasuries. And they bought it. It's the most insane thing I've ever seen. Like, oh my gosh, guys. Come back over here to this chart and look at this. Okay. Yesterday, you see it right there, that huge spike down in cumulative delta. They literally sold 20,000 contracts and somebody ate the whole thing. Somebody ate the whole thing. And we are now significantly higher this morning. And interest rates are at 3.3. Can you believe that? So let's just go back through a couple of the other charts here, give people time to come in and all that. Microphone doesn't sound quite right, but that's okay, whatever. You know, move it a little bit further away from me, maybe. It's probably just my voice needs to, yeah, it's the resonance from my nasal cavity. Okay. So here's the treasuries, or sorry, so here's the 10-year again. New highs. S&P 500 down, not too bad, but down. I think today might be a doozy though, so just be careful. Oil getting hammered hard. Gold and silver, they're not convincingly above 2,000, but they're like right there, right? I mean, they are above 2,000 at the moment, but they're not like, oh, for sure they're staying there and extending. It's not quite convinced us yet, but I think it's going to. There could be some opportunity in gold there. Bitcoin. This decline here was the combination Duquan / Coinbase Wells notice. They recovered most of it, but like you kind of seen some downside this morning. And then you got the dollar. Okay, when all this craziness happened yesterday, you saw a big reversal in the dollar, and now here this morning you're seeing it going even further. Okay, so market acting like the world really truly is going to end. So what is the big fear? What's the big one that everybody's watching and, you know, running around with their hair on fire this morning? Well, it's Deutsche Bank. And look at the overnight downside action in Deutsche Bank. Well, I mean, look at the downside yesterday in Deutsche Bank. So like, this price is not unusual for them. I mean, look, they've been this bank is a shit show. Okay, but that is a big candle, man. That is a big candle. Okay. And by the way, in the overnight market, they are down like 20%. Okay. So whoosh. That doesn't look good, does it? Deutsche Bank just looks like oi. Okay. So what's going on? I think I've had a shift. You know, I think I kind of knew when the Federal Reserve meeting happened, like something kind of turned. I was like, okay, something's going on here. I wasn't quite sure what it was. I thought that meant yesterday that we were just going to see some volatility and that we were going to get opportunity to go short and stuff. I have since changed my mind. Hold on, let me blow my nose. Another Yellen. I don't think it's quite that. Yellen is an excuse. Yellen is an excuse. So here's what I think is going on. So let's just review real quick. What is market elasticity? Okay. So in an elastic market, come bring the microphone out here a little bit, right? In an elastic market, imagine if you have a rubber band between your fingers, right? Okay, so your typical approach to supply and demand in a particular commodity is like, if we move up, then that's going to induce producers to produce more, to take advantage of the higher prices. And so that's going to kind of push price back to where it was. And that's what we mean by elastic. It's like there's a rubber band between your fingers, and that market force kind of pushes your fingers back together. So what would inelastic mean? Well, if the rubber band was inelastic, then when your fingers move apart, that rubber band just stretches. And so now if now there's just going to be slack in the rubber band. Like when you stop moving, the rubber band's just going to relax and it's going to be loose, right? That's inelastic. So the people's typical conception of a market is that the market is elastic, and that might be true for like the broader like commodities and things like that. But in a securities market, the stock market in particular, it is not. It is inelastic. And so you get a move up, it just stays there. Like all other things being equal, it will come back a little bit and then it'll just stay there. Okay. This conception that people have that it's like, oh, they're testing price and then it either gets accepted or it gets rejected. It's not like that. It goes up and it will just stay there. And when it gets quote unquote rejected, that's because there are people on the other side that know that it will be a little bit easier for them to push it back. And so anybody that's sitting there waiting for the counter trade will time it up here and smash it back. Okay. It's to their advantage to try and play it like as a reversal sort of a thing, right? So if you have an elastic market, that kind of leads us into this other thing, which kind of can create this trade. Okay. And it is reflexivity. I'm sure you've heard this word invented by George Soros. So what is reflexivity? Reflexivity is when there is some sort of a chain reaction feedback loop of sorts going on in the market. And I can see it now. The loop, we've kind of seen it, but we thought that the loop was ended. But I'm realizing now that it has not. So the loop is stock goes down in the pre-market. Everybody goes, oh no, what's going on with Deutsche Bank? And then all of the rich people that have more than $250,000 in Deutsche Bank go, oh man, maybe I better pull my money out. So then they pull their money out, and that causes the stock price to go down even more. And then that causes everything across the whole market to become constrained. And so the Federal Reserve came in and they said, oh, we're going to make this program that will give to regional banks and so forth to shore them up. So like, here's the thing, that action, the BTFP, I don't think that it really short circuited that feedback loop. All it did was make the banks, the regional banks, better able to withstand that feedback loop so that it doesn't doesn't put them out of business, but it doesn't actually stop the run. At least it doesn't seem like that's happened. And a lot of money came out of the regional banking sector, and now we're continuing to see relatively large banks, not like the big four, but like relatively large banks that have had problems in the past, that have had scandals and stuff like that, continue to be put under pressure. So the whole Yellen thing yesterday, it's like Yellen comes out and says, well, we'll do something about deposits. The reason the market cares so much about that one specific thing, which is will we insure all deposits, is because that's the only thing they can do to actually short circuit that feedback loop, right? It's the only you can give them more money and all of these sorts of things, but the feedback loop, the bank run thing, the only way that I know I can think of at least that would stop the quote unquote bank runs is if you insured all deposits, which I don't think is going to happen. I don't think it's going to happen. And so you're probably going to continue to see the market, because like notice yesterday she said, she didn't say, oh yeah, we are going to insure all deposits, right? That wasn't the walk back in the morning. The walk back in the morning was, well, we look forward to working with Congress to try and, address these issues. Right? So what does that mean? That means the feedback loop is still there. And like, here's the thing. You're one of these regional banks and you're in the BTFP program. What do? Because so you just got this cash back at par value for a year. There's an interest rate on it. Okay. What do you think you do with it? Well, I think this would maybe be an irresponsible thing to do, but I think that what you do with it is you go and you buy 10-year treasuries with it. This is probably not the responsible thing to do. It's probably a degenerate thing to do, but I guarantee you that some idiot bank out there is doing this, right? So what's the end game of this? Well, the interesting thing and the thing that I think some of us missed on the Federal Reserve meeting was there was a bunch of time spent talking about how, well, this actually constrains credit. So the Federal Reserve is not actually like super upset about this necessarily. You notice like that meeting was like relatively chill. It wasn't like, oh, everything's going wrong. We're here to be saved today. Don't worry, we've got it all handled. Except no, the Federal Reserve was just like, this is business as usual. Yeah, the financial world is collapsing. That's kind of what's supposed to happen. You get what I mean? So if you are the policymaker, you get two choices. One, you can either short circuit the feedback loop, or because here's the thing: if you short feedback, if you short out the feedback loop, eventually the market finds some other reason to fall out. So then your other option is this: let something fail, right? Let something happen that's so bad that freaks the market out so much that it comes down, and then you can bump it back up by printing money, et cetera, and you can do that fairly quickly, right? And the pain is brief, right? Lots of pain, but very brief, right? That's what I think may be going on in the Federal Reserve's mind, but I can't read their minds, so that's just one option that I don't think we've considered very much. Okay, so with all that considered, when Janet Yellen spoke yesterday, I tried going short the treasuries, right? And then I started to think about this, and then Jeffrey Gundlach was like, it looks like treasuries are going to go higher. And I'm like, well, I can't trade against Jeffrey Gundlach, so I bailed on that one. Now, and one thing that could kind of create that utter chaos is now that everybody is piling into treasuries is to have another large scale inflationary panic, right? So like if we had a CPI number in April, it was really bad, right? And all of this sudden interest rates shot back up from 3.3 back to 4%. That would probably destroy some people, right? Because these banks, how do you make the money back, right? You're under, how do you make the money back? Well, the best thing for you would be that you buy treasuries and then the market gets absolutely destroyed and those treasuries increase in value like 30-40% or something like that, right? And now everything's clean and now you can start over again. Where the banks, you can come back and raise interest rates with the banks kind of having made things back to break even, let's say, cleared their balance sheet. Real interest in the phase we were in. I don't know, man. I've probably been too much in my head. I think that I am experiencing a little bit of like an ADHD burnout sort of a thing, because I'll go into periods where I not paying attention. It's hard for me to organize and figure out everything that I'm supposed to be doing. Like I was going through these periods where like I was getting this stuff done and I was getting lots done at work and then having extra time and spending that on studying and things like that. And now it's like I don't have it. And I've been going back into trying to make music, to make music to get myself back into like doing stuff. So I kind of wonder if I just don't have what it takes to deal with this kind of stress. What DAW do I use? I'm using Bitwig right now. Yeah, oh man. Bitwig has been a trip. Let me tell you. I guess in some respects I'm glad that I kind of went with Bitwig because, you know, the drama can be fun, I guess. Yeah. Okay, so here's the story behind Bitwig. So once upon a time there was these engineers and they created Ableton, and they did all of these cool things that made Ableton like the most used digital audio workstation out there. And then once they started making money, the same thing that always happens is the people that are making the money have you go and spend all of your time doing the things that make you the money, and you don't get to spend the time on the things that you really actually want to do, like better 64-bit support and running the plugins in separate threads so that if a plugin crashes, it doesn't crash your whole DAW. And so these guys in Germany decided to go off and form their own company, and so they created Bitwig. So Bitwig is a descendant of Ableton, and they made a couple of little workflow improvements, although I kind of feel like it's more like it's just kind of okay. One thing that Bitwig does have that's a little unique, but I don't use and don't really care about, frankly, is the grid, which basically allows you to do like modular synthesis, but like it's built into the DAW. So it's really, really well integrated into the workflow and everything else like that, as opposed to like some third-party tools that are out there that allow you to do modular synthesis. So that's cool about it. So anyways, the rage in the past year in the digital audio world. See, this is what I should have just created. A YouTube channel where I teach people how to make music. And so there's been so many YouTubers that like they started doing it on the YouTube, and then all of a sudden they were a big artist and stuff. Man. And I made a video or two that were better than my trading videos. I think that the trading has been a better channel overall, but I would be more popular that way, at least. Anyways, I digress. The big thing in the music world has been, how do I put this? Like, spectral shaping. So like, what it is it's kind of like, okay, what if every time that there was more bass in the sound, I did this to it, right? So it's using these sorts of multi-band kind of things to conditionally trigger effects in certain ways. So that, for instance, you have a kick. You want the tail of the kick to be crunchy. You don't want the first part of the kick to be crunchy. So you come in and you do this like there's some compressor on it, or there's some gate on it, and then when it's over this threshold, then you start to trigger the crunchiness, right? Well, you build these kinds of tools that kind of do that all for you very, very quickly. And there's been a lot of tools like this that have been made. And so the guys in Bitwig decided to make tools like that and make them like a separate add-on. So Bitwig has like a subscription sort of a thing where like when they upgrade, you have to pay for the upgrade and stuff like that, right? So everybody's like, oh, I like the program, I'm paying for the upgrade. You're going to continue to, you know, update my software until the next major version and whatnot, right? That's what I'm paying you for. And instead of doing that and making the incremental improvements that they were supposed to make that benefited everybody, they went and they created this new set of plugins that you have to pay extra for. And the community was so pissed. And it definitely has me like, I don't know if I want to use it anymore. But for now, I have so many projects and stuff in it. I have like 6 projects right now, 7 projects that I want to finish. And they're all in Bitwig. So I'm going to stick with Bitwig until I've finished all of those. But then maybe after that, I might switch. I don't know if I'll switch back to Ableton or if I'll go to Studio One. Studio One had a couple of plugins that were pretty good. Yeah, I make mostly trance music. I've kind of been trying to get a little bit more bassy though. But yeah, I mostly make trance music. If you want to be popular, do the ICT trading concept. Nah. Let me tell you something. This ICT trading concept is bound to burn out, right? That's the whole thing. Is I could come in here on this YouTube channel and I could probably become popular really quickly off of like one thing. You'll find that one note that the algorithm really likes, and then you just hit it so hard. But you know what that causes is everybody gets sick of it, right? What, you know, like with this smart trading concepts, I've already seen it. There's already been a generation of people that have gone in, tried the price action smart money concepts thing, and blew out and gave up, right? And there's like this dissatisfaction with it. So it's just kind of, there's a little bit of a lag, but like I think that you're gonna find that a year or 2 years from now that the community overall starts to react adversely to that stuff, right? So I had a stream, for instance, once when we had an earthquake. You remember the earthquake trading bunny, yeah? I don't think you were here on the stream, but she lives in the valley, so she would remember the earthquake. And it was kind of funny. the video of it was kind of funny. And so that got tons of views, right? When the Bitcoin futures went live, I got tons of views. And you know what? Like those things did help the stream to an extent, but like really they didn't. You know what has helped the stream the most? Making that order flow series. When I first did it, I was really disappointed because they weren't really doing very well. But now that first video in the order flow series is the most watched. Well, on a 24 to 48 hour basis, it is usually the most watched video on the channel. So I'm getting like hundreds of views on that video every day. And now the Ninja Trader basics video is doing really well. I think that in the near future, I'll be making one for Jigsaw. Right, those are the things that help the channel, and so we're here to play the long game. I know that it's futures trading and it's short-term trading, but you have to take a long-term perspective on things too, right? Because the further out you can plan, the tendency tends to be that the further ahead you can plan, the more money you can make from it, right? So yeah, I'm gonna do a Jigsaw one. I think that they've got some newer things coming in a bit, that so I'm waiting on something. But yeah, then I'm gonna write up a video and do the similar thing for Jigsaw. I actually, so in that video where I go through my workspace, kind of talk about a lot of those things, but I'll make it more into a nice perfectly formatted video like the jigsaw one. So there's one that's like, oh, people want to see how do I actually have my workspace set up. So there's a video for that. Not that it's one that I think brings in a ton of people, but like people ask me enough about it that should have a video for that. But then I can make one that kind of reformats it into the top 10. So anybody that has Jigsaw is going to be like, oh, yeah, I want to check that. Or especially if they're new and they're looking for a YouTube video and then they're going to go find that one, right? Like those are the things that help the channel. And then I really still want to get into bigger picture things at some point, you know, like current macroeconomics and understanding what's going on and, you know, how the market reacts to it, how different players are, you know, could potentially be positioning themselves and stuff based on that. You know, like right now, one that I find really interesting is the housing market, because like, okay, so normally you have interest rates are relatively high and housing prices go relatively low. And it's actually not a bad idea if you think that a recession is imminent, go in and buy the properties. And then because the prices might actually go up when the interest rates come down, right? And so then you can get the low price and just refinance it in a year and you're great, right? And if it doesn't happen, then at least you still have the house or whatever, right? But it's kind of interesting because right now prices are still real, you know, prices aren't actually low. So I don't know if that one makes sense, right? But that's the real estate market, for instance. Okay, in the prior stream, you talked about the autocorrelation of market orders. How do you measure? Okay, so we were dealing with this yesterday, and I was like, oh, wait a second. This was not quite the way that I had it before. Oh, which reminds me, I need to turn this strategy on. So let's go back into that. I don't know if, oh yeah, Uzi is here, so we can finish this because I was kind of doing it for Uzi because he asked that yesterday. Okay, run that. New editor. I'm gonna share this strategy with you. You'll be able to see the code. I'm not gonna post it, but you'll be able to see the code. Oh, not price action, order flow. And I called it Delta flow RT. Okay, there we go. Okay. So I've added a bunch of things on here. I have your cumulative delta and I have your market order imbalance. Okay, so your market order imbalance is like in that bar, how many more buys were there than sells, right? So what this is looking for is looking for a spot where, okay, so first of all, price and cumulative delta need to be relatively correlated. They need to be positively correlated. Second, there needs to be an imbalance. So there needs to be in that bar, if we're going to go short, there needs to be more selling than buying. And that difference needs to be over a certain threshold, which I think in this case I have set to be 1,000. So this is the one factor of the indicator that probably needs to be like retrained regularly. And then I have cumulative delta, and then I passed cumulative delta into R squared. Okay. Over what time frame? I think that it's the short period, so it is over a 10 bar period. Yeah, over a 10 bar period. Yeah, you have to have a period for correlation. You're correct. So over the last 10 bars, they need to be positively correlated. And then there's the R2. Okay. So R2, R2 is a measure of like how predictive something is, right? So you come in and you say, okay, I think it's going to go up. And then every time that I make a prediction, does it actually go up? And R2 basically says how predictive is that signal actually of the action. Okay. That's what R2 says. Or what R squared in a general statistical sense is, right? R squared in NinjaTrader is basically running that statistic on the data series itself. So if you run it on a price series, then it says, okay, if it went up last bar, then does it go up this bar? And you go back over the last 60 bars, how consistent is that? So if you have a data series that is just like straight up, hold on, do I still have G-Ink open? I do. So if you have a data series that looks like this, then R squared is going to be really high. Okay, and the highest it can get is 1. This a perfectly straight line would be 1, right? And a perfectly flat line would be like 0. Okay, or well, maybe not necessarily. I don't know what it would do in a perfectly flat line, but if it was like this, if it was like a really squiggly line sideways, okay, then that's 0. It's like this bar that tells you nothing about the previous bar, essentially, right? No trend. Okay, so R squared basically ends up being like a score of like not only how trendy a trend is, but like how consistent a trend is, right? So this is a measure that I think a lot of retail technical analysis traders are looking at subconsciously, and they don't realize it is they're looking to say like, okay, well, this doesn't always work, so I'm only doing it in situations where it seems to be working. And that's what we're doing in this situation too, is we're saying, okay, price and cumulative delta seem to be in line. I'm seeing an aberration in the balance between those market buy orders and market sell orders, and the trend in that imbalance is consistent. Then I take the trade. Okay, so that's how I measure. That's how I'm measuring the autocorrelation of order signs, right? It's basically like if there's 1,000 more buy orders than sell orders this bar, and it continues to be like that every bar, that's a consistent imbalance, right? In those market orders. In other words, the sign of the market orders tends to be correlated, autocorrelated, right? Okay, so how does this perform? Well, there's a big problem with this strategy, and that is that I can only backtest it on a year's worth of data. Rhythmic will only give me 1 year worth of autocorrelated data. So I can go and I can backtest it on the last year. And a previous version of this algorithm was like kind of okay, but then I ran it on the most recent data. So here I have them actually. So here's the one that I had before. So last time that I tested this one, it was quite good. Now it's just got a profit factor of 1. Just got a so in over this time period, it was ineffective. Okay, but that is without this is basically the strategy that I just showed you without looking for the autocorrelation factor, right? So now you add the autocorrelation factor and you get this. Okay, so it didn't make money on the long trades. That would make sense just because during this time period, the treasury market has been mostly down, right? Hold on a second. Let's see here. The assumption is that the autocorrelation persists. Yes. Well, the empirical data is that the autocorrelation persists. So the particular study that this comes from is they would just look at a random order and they'd say, is it a buy or a sell? And then an hour from then, they would look at another random order and there was a 0.05% chance that it was more likely to be the same. So they did a bunch of study about this and tried to figure out why, and what the evidence that we have suggests is that this tends to happen because of large meta orders. So somebody out there is buying and they're going to buy over a long period of time, and so over an hour's time period there's going to tend to be that autocorrelation. Okay, so that's why my long period is 60 minutes. Okay. And it works well. I think that I did it on 20 minutes as well. Was it this one? Maybe not. I don't know where did it, or maybe I got rid of that one. I tried it on 20 minutes as well. I can't remember what it was. So now when you look at this, like, look, the profit factor is only 1.13. Okay. And the Sharpe ratio on this one is not super awesome. The earlier one, it was like one of the best. See this one right? Oh, not this one. This one right here. Autocorrelated flow. 2.72. But I was getting that by cheating a little bit. And like, look. Average winning trade, 13, -9. This could use a little bit of work, right? I think that what I would like to try and add to this strategy is looking for certain things that really give me a good idea that it's good to take a long or a short. I might be able to sort that out myself during the day to say, okay, today is the day where we should be expecting long meta orders, and so I'm looking for this one versus this one. But the algorithm doesn't know how to do that, and so these shorts are pretty bad. Because when you look at the Sharpe ratio on this one, it's a lot better. Oh, actually, it's only 0.35. Also, getting 14% on the short trades for the probability is pretty good. Getting 0.64 for the R squared is pretty good. So that's the measure. Is there something you can measure ticks, like upticks, downticks? I'm not sure why or what you mean from there. Can't you run the autocorrelation of the autocorrelation? Well, I think the thing that I need to do is the first thing that I need to do is this imbalance thing. Needs to change a little bit. Oh, actually, you know what? I'm doing it from a percentage choice. I'm saying if the imbalance is more than 60%. Is how I'm doing I'm not doing it based on number of orders. I'm doing it on a percentage of them. So if it's more than 60% buys during that period, then I do it. That's what I'm doing. So maybe I don't need to like forward test adjust it regularly. But I do need to do something about the longs versus the shorts. There's probably something else I can look for in the flow that can tell me long versus short, because there does appear to me to be differences between how a long, like there are certain kinds of strategies that do better in long markets and but certain types of strategies that do better in short markets. So have you tried treating your signal? No, I've not, because this is really more like, I usually don't intend on trading these, like running the algorithm live. Because I've always found with at least these ones, I think when we get into like machine learning and stuff, then it'll be different. But under normal circumstances, I can trade it better than the algorithm can. And that would only be the case if it was like, it was really fast, something like that. But for this one, so I usually don't take them that far. I've kind of messed with that kind of stuff a little bit, but I usually don't take most of them that far because I do the back test. I prove the specific thing that we're looking to prove. And then, this one I don't think would be different with machine learning. I'm saying there are some other algorithms that I want to do with machine learning. I really want to unleash machine learning and look for hidden Markov models in the imbalance on the limit orders in the book. That's what I want to try, and I'm just not getting around to it. It's kind of funny. I've had like a few moments to breathe here and there, and I've been making music with it. And I did one. I wonder, so I had this one that's kind of more of an edit. I think I might post. I'm kind of deciding between whether I want to post it now or if I want to try and take their music video and edit their music video too. But this is unrelated, but reading about meta orders in that book and intraday seasonality, it seems like 10 minutes prior to the top of the hour is when a lot of banks run their order execution algos. Do I have that right? So I don't remember them talking about that specifically, but there is like this daily seasonality sort of factor in there. And I think it has more to do with when the market's open more than anything. Like, so you get this one that kind of starts at 6:30 our time, 8:30 Eastern time, because of the big news events, that the big economic releases that always happen then, right? So then you get like 45 minutes after that, roughly speaking, is when you can get the next meta order that can kind of come through. And then that next meta order also it just happens to line up with when equity traders start coming in and start trading the pre-market, right? And so you kind of get a cycle from that, like every 45 minutes from that. And then the banks do kind of try and fuzz it because they don't want it to. If it was like every day at 7:15 exactly there was a move, then everybody would figure it out. So they kind of fuzz it, and there's kind of like a 20-minute, bracket around that they kind of use to try and fuzz things. Huh? So like 10 minutes prior to the top of the hour is kind of, they do kind of that's kind of the sort of thing that they do to when to start it though. Now we're changing him. Yeah, but I like the whole thing is like my takeaway, and that's the one that's like the most complicated part of it. Is like so in that book is as they go through all of this stylized behavior of order flow, and then at the very, very end they talk about OnGround Chris, right? And why OnGround Chris works, essentially. So by the way, how far down have we come? 50. Oh, okay. So OnGround Chris is an algorithm that was developed in 1999 that was used to optimally execute extremely large orders, like an index fund. Like it's called it's called optimal execution of large portfolio transactions, I believe is what the paper is called, by OnGround and Chris. And basically the gist of it is that what they learned was that you push the market in with orders and you push it a little bit, and just enough to have an effect, and then you immediately back off, and then you do a little bit more, and then the algorithm, based on which direction you think the market is going to go and how much risk you want to put on, whether it's better to execute the majority of the volume at the beginning or at the end, or there's different ways that it comes out based on what these conditions are, right? And that's where I come back into this. Okay, here's how you can time things. Is that like the shortest time period that you would want to use for something like that is every 45 minutes. So if you just saw a big move and you're worried about chasing it, and you don't think that the market is becoming unhinged, that's another key, is that there's like this point at which the square root law stops working when the size of the order gets too big. So when the market goes into that mood, that's when it just becomes all chaos. But if you don't think that it's going to become all chaos, then it might be better for you to wait 45 minutes and try and take the next leg. Right? That's what that's all about. Okay, so I think somebody said something earlier. Does anyone in here use Telegram? You know, there might have been a day where the Discord would have been created as a Telegram instead, but use Discord. And I think that Discord is the best, like, feature-wise and everything. It's better for what we do. There are not like there's not some advantages to Telegram, but like I'm not really too concerned about all of the communication is secure and everything because we're all about being public. Oh, Kulud said if you want to do an in-depth series on your PDF, go over every section and explain it. Yeah, I'm wondering what I should do with that. For one, I definitely want to promote the PDF. So I have a bone to pick with you guys. This is the wrong way to go about this conversation, but okay, guys, I need your help. Okay, look, I like, just straight up, I'm ADHD. I totally am, and there are like some serious disadvantages to it. I know that some people treat it like it's a superpower and everything, and I kind of treat it as like it's not a big deal because I'm really successful with the medication and I've been doing it like most of my life, so I think that I've overcome like most of the most serious challenges with it, and I can come in, and if that's the only thing that I have to focus on and I can just kind of center my whole life around focusing on that one thing, I can be hyper productive on that one thing. Problem is just that there's so many demands on me right now. Right? In order for the YouTube channel to be more successful, I need you guys' help. I really do. And now I think Uzi is doing a good job when he comes in and he's saying you should do this and you should do that. I think that most people would come in and would be like, well, it's not really my place to tell him that, and he's probably going to ignore him to some extent. But the reality is I can't see that stuff, man. I just can't. I don't see it for some reason. And I'm not consistent. Like, the thing that I'm most interested in and focused on and like my strategy, etc., changes from month to month, if you haven't noticed, right? In terms of like what I'm promoting on the channel and what I'm pushing for. I've gotten better at that. Like last year when I said we need to focus on getting a really good series on order flow together, and I did that, and that's been really successful, right? We need to continue pushing on that, you know, but there's still these deficiencies, and one of the places that there's a deficiency is on the promotion side. Now, part of it is that I can only do so much to, like, if I go and I post on Reddit and then I try and like directly promote myself in the comments or whatever, people don't like that. So kind of what it turns into is people go, oh, this guy is kind of interesting. It seems like there's something different about him. What's his deal? And then they start going and reading my post history or looking at my profile and they realize, oh, this guy has a YouTube channel, right? But like, for instance, when there's a Reddit thread that are like, what are some YouTube channels that you watch? I need you guys to go into those threads and plug our channel, all right? And you shouldn't do it just because it helps Seth, and we want Seth's YouTube channel to be successful so that he can put more resources into the channel. Here's why I think that you should promote the channel, okay? The market is not informationally efficient. there was a belief among people that the reason that capitalism was successful was because the market is perfectly efficient. And so whatever it is that the market decides, that's the correct thing to do. And so we should just always go down that path. It's bullshit. It's wrong. Okay. It was a useful idea in the 80s, but we have moved past that now. And in order for us to progress as a society, we need to overcome this idea that the market is perfectly efficient. And we need to understand that in order for capitalism to function effectively, we, the people, and especially those of us involved in the market, need to make good decisions about where we're going to put our money and what sort of approaches we take and so on and so forth, right? Because when you just leave the market to itself and you put it completely in charge, it becomes a monster, right? And in order for us to make those better decisions, we need to understand the things that I've been teaching you on this channel. You need to understand like the very basic microstructural effects of how this whole system, to understand how it results in larger kind of formations and movements and so forth, right? So only then can we start to go in and say, okay, why is it that the market's not informationally efficient? What does that actually look like? What kind of decisions do I have to make based off of that, right? Because that turns it into a really complicated thing. The market is not efficient. The market is inefficient, okay? I do speak of all of that I said, but it might be hard to understand the bigger picture without watching a bunch of different videos. I need to work on that, I guess. We need people to make better decisions, and that means they need to understand this stuff, right? And the more retail traders we can get out there that understand this stuff, the better the market will function and the better society overall will be. Just that's the bigger picture here, and that's why I would hope that you plug the channel when you see a YouTube channel come up, right? Because the thing is going to be like, look, because the market is inefficient, that means that there's opportunity for us to make money all the time, right? But because the market is inefficient, it makes it really hard to make money from that inefficiency. Right? So that's not always going to be the rock star that's killing it and the profits. That's, you know, it's going to depend on how well I know that market, right? But the key thing is that on this channel, you're going to learn things that we can prove are true and are important for us to understand, right? And then it's up to you to take that correct information, practice, utilize it well, and make money from it. I believe that you stand a much better chance out of making money from that compared to many of the other things. Because many of the other things that I see people go after, the reason they're making money is because they're lucky, right? If you just want to leave it up to chance, then go ahead. But I say, if you want to take an informed approach, scientific approach, this is the place to be. And we should be sharing it. I think that a lot of you take that you have this thought that like, well, if I find something and we know that like the more people that trade off of it, that's more competition for me, so I don't want to share it, right? But that's why I'm not giving you direct signals, right? I'm teaching you the main principles, and you have to come up with the strategies on your own, right? See, I start plugging the channel and people leave. They're like, yeah, I don't want to care. But because the reality is I've done really well on my own. I've done much better on this channel than I ever thought was possible. The only way that this channel gets to the next level is with your guys' help. That's just the reality. That's the thing that's holding me back, is that I have been unable to effectively harness the amazing audience that I have to continue pushing the channel. Is the best venue? I don't know. It may not be, but you know, I just, the thing that I constantly see is like, if there's a Reddit thread or there's a thread on Futures.io or anywhere that I'm reading where they're talking about YouTubers, that nobody ever talks about me. And I feel like they should. I feel like this channel has a very relevant and unique perspective amongst the YouTube guru space, right? Because we're the ones that basically have an explanation for why this tends to go the way that it does, right? and why the YouTube the way that most YouTube channels around trading are structured is not really very useful to you, and why we made our channel different, right? So I think it should come up. So so what I'm trying to convince you is why it's important for you guys to bring those things up, right? And it's not for Seth. It's because the things that we're teaching are important for people to know. Both because we want other retail traders to be successful, and because I believe that it will help society at large, right? Like, it just, you know, to take this from a different direction, when you look at the political arena, right? Because I think that people have been really unhappy with the government, or not with, I mean, people have always been unhappy with the government, but I think that people have been really unhappy with the way that things have been going politically, like ever since the Bush years, you know? I mean, there was some hints of this in the 70s and 80s, but like after George Bush, politics have been really different. And there's, you know, the left has had their day, right? The left wants to change things. They had Obama for 8 years. They've had Biden now for 4 years. And there was just Trump for 4 years in between that. And, you know, Trump didn't really get a whole lot done, right? So you've had the people in charge that are supposed to be changing things, and nothing has changed. Why is that? Well, I'll tell you why. Because people haven't taken the time to understand the microstructure of the systems that they're talking about. They continue to go down this assumption that like the market is perfectly efficient. And so they're not able to effectively look at these systems and say, here's how we need to change this in order to create better outcomes. Instead, we come up with these philosophical positions. And because they're philosophical, we can't get everybody to agree on them, right? If it was science-based and you were able to show everybody using the science how this solves their problems, it's so much easier to get people on board, right? The way that you get people on board is you solve their problems, right? Okay, have you thought about reaction videos to popular videos and reconstruct what they do from a microstructure framework? Okay, yes. So I haven't made a whole lot of YouTube videos on that, in that respect, but I have made reaction style videos. So probably the best example of that was, there was a video where Daniel Inskeep made a video about testing this algorithmic trading service, and he was very generous to them, but basically the conclusion that he came up with was it doesn't work. And so I made a video that was basically like, well, here's what's going on, here's why it works this way, and here's how that guru is fooling you, right? But that video doesn't really get a whole lot of views. I don't think that it gets recommended when people watch Daniel's other video, you know, like it just didn't really pick off. And what I found in general was that when I go on TikTok and I make a video that's like, well, okay, here's what's going on, even though what I'm saying is backed by empirical evidence, and I can prove that what these guys are doing is wrong, people still turn it into like an authority battle. You know, it's like, well, who has more followers, right? And this kind of like general approach to be like, okay, here's these other people out there that are popular and they're full of shit, so we're going to tear them down, sort of a thing. When I do that on TikTok, is just not very effective. It just doesn't work very well, right? I think that what works on TikTok is you've got to do something that catches people's attention in the first second of the video, and you've got to actually solve their problems, you know? Like when somebody's, you know, and that's the other thing that I think is so powerful about what we do, is that every trader comes into these situations where it's like, okay, you have a signal or whatever it is that you're doing, and you believe with every fiber of your being that the trade should work, and then it doesn't work, and you're like, what the hell is going on? Is it just random, or just unlucky? What's going on? And we have an explanation for that, and how you can best try to deal with those. And once you understand this framework, all of these other difficult questions that people tend to have in trading like get answered very easily from there, right? It's very rare that people ask me a question here on the stream where I'm kind of like, well, I don't know, I've never been able to deal with that problem or whatever. So it's like, usually we have a clear answer, right? It's because once you understand the microstructure of the market, everything just makes so much more sense. It makes sense why so many things don't make sense, right? It's just, you know, it answers the questions that people have. That I find is more effective. And another way of looking at it is, the people with the most value are the people that make everybody around them more valuable. So I believe that I have become a figure in the day trading. I'm not as prominent as I think maybe I should be, and maybe I'll never get there because there are some limitations about just Seth himself. Okay, but the success that I've had, it's been because the people that watch this channel become more valuable from watching this channel, right? Yeah, I think people who look at trading videos want a simple strategy that consistently, quote unquote, works and makes them money. I don't think too many people want to understand the underlying structures. That's the problem. That's the challenge, isn't it? Right? Is how do you convince people to be interested in this? Right? I'm sure at some day market microstructure is going to become like a thing, and then it will be the YouTube trend, and then maybe we'll get all of these viewers looking for that. But this is a completely different problem that I don't think anybody hasn't, like the government doesn't have an answer for, right? Like the problem that the government has right now is, oh hey, the true and useful information that we want people to have is not as popular as the useless conspiracy theories that don't help. How can we make it so that the correct information is more popular? They can't figure it out. They've just resorted to like, well, we'll just modify the algorithm to give our, you know, information better. But then that's just them, you know, picking winners and losers, and then they end up pushing information that is not actually true. By explaining to them how the correct information translates into actionable risk management strategies. So one idea is that when I get a really good trade like that, and I'm able to use that information to manage my risk, and you can see how it was effective, you know, I'll be like here on stream and I'll explain to everybody on the stream like how I did that and why that worked out the way that it did, right? I need to turn those into videos. Okay, what's the use of understanding underlying structure if the market is efficient? Okay, so the key thing to understand here, and how this turns into actionable strategies, is that you have to understand that it's the orders that move the markets. So the market that we're in right now is a good example. I'm not going to trade it because it doesn't seem like they're creating a trend here. They're just kind of trading back and forth across this range. So, okay, but yesterday, for instance, Janet Yellen came in and said one thing, and you would think that would be like a good reason for the market to move down. At least going based off of logic, it should be like, they got the program, everything's fine, interest rates should come back up. And it's not playing out that way, right? It doesn't play out in the way that things should be logically. But what determines the way that it actually turns out? It's the orders. The orders are what determines the price, right? Now, you just have to figure out what are the things that are actually affecting the orders the most at this moment, right? So once you make that connection and you realize that the most important thing for you to do is to try and predict the orders, now you can turn these things into actionable strategies, right? Now you can come in and you can say, okay, well, there's going to be more people out there willing to buy treasuries because these banks are getting this cash and they might put it into short-term treasuries, right? And then you can also say, okay, there's these other things going on too. So I need to look at all of the different things that could be affecting the orders and then sort out what I think they're going to do. And then you can make those kind of decisions. And kind of the thing that you come out with is that you need a pretty strong predictor, right? You need a pretty strong predictor. So I might think that interest rates should go higher because of inflation, for instance. I think that inflation's not done. So I think interest rates are going to go back up at some point, right? But why would those orders come now, right? I need something that's actively triggering those orders, right? And so then that's how you can kind of determine when to take your trade, even despite the market being inefficient, right? And see, that's the thing. 99% of the time, nothing is impacting the orders. 1% of the time, it's a headline news event. I would put it like this. About 60 to 70% of the time, there is an imbalance in the market orders, at least here in the treasury market. It's going to be 60 to 70% of the time that there is an imbalance and that there is an opportunity to trade, but you might only be able to determine ahead of time that imbalance is actually there using the information that we have, maybe like, a quarter to a third of the time. I think that's kind of more the problem is being informed enough to be able to see the imbalance, as I think more of the issue. And ultimately people sit around waiting for news to impact the market, only get by poor liquidity. Yeah. Well, you probably feel like that right now because we've come into this market where the liquidity is shit, right? Because like that's the thing is before the markets turned into like all on panic, I was doing pretty dang good, right? And then once things started to get a little frantic, then it wasn't so good anymore. You would think that limit order totals would determine an imbalance. Well, you got to remember the thing that I say is you got to predict the orders, right? Because yeah, and an imbalance in the market orders. If there's so if I knew that over the next hour there's going to be, I don't even know what would be realistic numbers for an hour. There's going to be 80,000 buy market orders and there's going to be 60,000 sell market orders, right? Then I can pretty easily figure that I should just buy, right? I have to predict that is going to happen. How often can you actually predict that? Well, you have to have a real informational edge, and that real informational edge can be difficult sometimes to get. But it can be done, and you can be consistent. And when you apply all of those things together with everything else that we know about the markets, and especially your risk management, you can work out something that's profitable. It's always going to be difficult though, right? And I think that the bigger thing, the thing that makes informed trading difficult is that it's a constant battle, right? See, the appealing thing to technical analysis is that, like, once you've figured the pattern out, then you've made it, right? Now all you have to do is just trade effectively on the quote unquote pattern, and it's good, right? Stacks and poles mean, well, okay, stacks and poles are not predictive. Yeah. Stacks and poles on their own are not predictive. But if you have something that's predictive, and then you see the stacks and poles in line with your prediction, now all of the sudden the predictive quality of the information that you have is that much stronger, right? You can trade so much more confidently on that information. Yeah, a lot of stack and pulling is mostly algo. I think that a one difficulty that you're going to have trying to trade order flow in the very beginning is kind of knowing what is actually actionable, right? Because I think you've probably certainly seen times where, like, I'm sitting here talking about all this information and yada yada yada, but then all of a sudden I see something and it makes me want to get in, right? So there can be a situation where the signal that I get from the order flow is so strong that it instantly tells me, oh, this one thing that I was kind of looking out for, but I wasn't sure was a thing, is absolutely a thing, and this is gonna go, right? Like that can happen. And when you're beginning, you don't know, like, what is that threshold? How much is enough to actually take a trade on? And you just kind of, like, this is where your brain is a neural network and you're training it, right? To figure out, based on the context, how strong of a signal is enough for me to want to do something, right? Then you watch people trade, right? And the one thing they all have in common is risking mountains of ticks to make teaspoons. Well, taking on risk is a really, your ability to take on risk is a significant edge. That's the bigger issue. That's the big issue for somebody that wants to trade a small account or a retail trader that doesn't know anybody, is how do you know that the reason they're making money is because there's an actual edge in their analysis, or if their edge is just taking on risk? I would argue that most of the people that become prominent in the retail trading space, these gurus that people follow, it's usually because of their ability to take on risk and not because there's actual efficacy in their analysis. And the reason I see that is because every time that I find something that I could, like, actively backtest or do a statistical study on, it comes out and it does not show the results that they claim. Yeah, you can make any strategy work with a 4,000 tick stop loss. You're right. There's something about it. This is, I think, like, going back to what I was saying earlier, I feel like this is the question of our generation, is that there are certain things, certain ideas, strategies, ideologies, etc., 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 that are not good for society, but end up being the most popular anyways. And why is that, and how do you overcome that? Yeah, if you trade the micros with an active stop that's like 10 ticks away, that'd be super hard, I think. Yeah, well, I don't want to risk 100 ticks though. I would prefer to not risk more than 20, to be honest with you. Sometimes I make exceptions. I shouldn't, because it seems like whenever I'm making the exceptions, I'm on the wrong side of it. But I guess that's kind of this is something that I need to learn, and I haven't learned yet. Oh, we have a news here in a second. Hold on. Yes, we got the PMI flash here coming in 23 seconds. With the way that we're trading, you shouldn't have to take on a lot of adverse ticks, but there are some situations where I'm like, well, it's gonna do that, you know. Whatever happens. Okay, well, that was a pretty strong reaction to the services PMI flash. We got a reading of 53.8 versus a expected reading of 50.3, and so that is pushing the treasuries down quite considerably, and the market liquidity is still quite weak. There is a big order at 16. There's always something funky going on at 16 because it's half a handle. That's what all of us look for, that breathing room, because predicting anything is well, it's not that predicting anything is fruitless. It's that there's like, hold on. If I were to draw a graph and the y-axis is the x-axis is R2, meaning retail traders' ability to make effective predictions with the kinds of strategies and information available to us, and the the x-axis is time, which is to say, how far in the future of a prediction can you make? I think it looks something like this. On a short time frame, there are some strategies that we could kind of take advantage of, but have been taken away from us. So there's this little bit right here that is just, we don't have any edge. And then there's kind of this area where we do have an edge, right? And then it kind of comes back down. And then there's a period on long time frames where we have a really big edge.
23, 4 quarter on the news feed for those of you that are interested.
Right.
That is the March prelim.
So yeah, I think the challenge is you come in here and you do this and you want to move over to this. Is that eventually you want to move from taking your short-term trades and you want to turn them into being able to take big risks over like a 5 to 10 year period. How is it taken back from us so the market is efficient? Okay, so I don't think I've had this discussion with you, Mr. M. So the thing that you've got to keep in mind with efficient is that we can break efficient down into different categories. So we say, is the market efficient overall? When people say that, and when I'm saying that, what they really mean is current price reflective of all information? What we mean by a way of approaching that would be, is the market informationally efficient, right? The market is not informationally efficient. Okay. That's pretty well established. But like you just said, there's kind of like these short-term strategies right here that, like, these robots, we might not have a very good ability to do stuff, but the robots do. How are they doing that, right? Well, the market, if you were to look at the market and look at a pattern and look for a statistical inefficiency in that pattern, it's extremely hard to do. So the market is statistically efficient, right? So the market is statistically efficient. It is not informationally efficient. Why is that? Because orders have strong impact is what it can. And that's why, again, I say that the key thing that you have to realize is that it's the orders that move the markets, and the orders have more impact than people think. Which is to say, if I come in here and I buy 10,000 treasuries, how far will that move the market? And the amount that does move the market is probably how much would I say? I would say it's probably 5 times more than what most retail traders would predict.
Hard pressed to find other banks in a similar situation.
Yeah, if you put 10,000 contracts on ZN, you say 5,000, but I'm saying 10,000 because there was a time when 5,000 contracts was just like one price level. Okay, but if you came in and did 10,000, because that's like an average sized move in cumulative delta on the treasuries and net difference of 10,000, so that's why I'm saying 10,000. Okay, 10,000 contracts moves the markets about 5 times more than most retail traders expect. Right. So the reason I say 5 is because of the inelastic markets hypothesis. So they went in and they said, if you put $1 million, you sell $1 million in bonds and buy $1 million in stock market, that should make the market cap of the stock market. But based on like if everything was perfectly efficient and everything, it would move the market cap up by $1 million, right? No, actually it moves it up by $5 million because the market's inelastic. Right? Why is the market inelastic? Because orders have strong impact, right? So what that means is that if there's this tiny little statistical inefficiency, it doesn't take very many orders to remove that from the market, right? On the other hand, the market ends up being not informationally efficient because there's these people out there that are just trading an index fund, and there is absolutely no informational content behind their orders at all, but they still have impact. And so those completely random stuff can move the market far, far away from what the fundamental price would be. So that's how you end up with a market that is very statistically efficient, but not very informationally efficient. If 10,000 contracts hit the bid right now and ZN 10,000 limit orders would appear out of nowhere and the price wouldn't move. Well, I'm telling you, Uzi, that move yesterday, have you ever seen anything like that? I don't think I have ever seen the market just straight drop 20,000 contracts net and then absorb it like it was nothing. Like, I straight up think that some hedge fund just took on 10,000 contracts, like 10, 20,000 contracts, because that's nuts. And it worked. Like they're up on the position big time.
That's Bernard says.
And then you sit there staring at your DOM wondering which side,
Potential tools that can be deployed.
Well, I think yesterday, I think that was maybe kind of gave the game away though, right? Like what we do about it right now, I'm not so sure. But kind of what I was trying to say at the beginning of the stream is I think what happened yesterday suggests that there is a reflexive trade going on in the market. And if that is the case, then this is probably going to continue until either one, something breaks the reflexive loop, or B, like everything gets destroyed. Like, they've been saying for a while, like, oh yeah, the Federal Reserve is going to keep raising interest rates until something breaks. I think that was wrong. I think it's that it keeps going until everything breaks. You know what I mean? Like, back to VWAP and ZB. Is that like overnight VWAP that you're looking at though? I do kind of wonder. So like the thing is that we don't have any other significant news today. They did react to that sell quite a bit. But if we're correct in that larger kind of play, whatever kind of downside action we end up seeing here, once it dissipates, you should buy, right? unless inflation is like really a big problem. I don't know if it's appropriate for me. I feel like that what I'm worried about, guys, I don't know what to do about this. I think the only thing I can do about this is just acknowledge that that's the way that it is and try to deal with it the best that I can. And if this ends up being an insurmountable object that prevents me from ever really truly having the kind of success that I want, then I'm just gonna have to accept that. But like a situation like this, I get in and then it's going the wrong way against me, I get so stressed out about it, man. And I don't think I even realize how stressed out I am about it. Well, that decline there was pretty steep, wasn't it? Like, we started this stream 3.3, we're now 3.34. So not quite a 5 basis point move, but it looks like it might get there. You've never, really, actually. That is interesting to me. You know, what's shocking to me is how quickly it changed. Because I'm pretty sure that, like, at the beginning of the week, it was like 30% that there would be no change and 70% that there would be another hike. And now all of a sudden everybody's turning and saying that they're not going to hike. And it usually approaches 80% a week or two from the FOMC, not a month and a half. Yeah, and that's particularly striking given that that's not what the Federal Reserve has been saying, right? Federal Reserve is still kind of, I mean, from my reading from Powell on Thursday or Wednesday was they're going to raise another one and then they're just going to keep rates the same. And and at the same time, the market is like, yeah, they're going to reduce interest rates here. Oh man, how deep is this? I'm starting to feel the FOMO because even though I've kind of decided that I'm not sure it's a good idea for me to get involved, I think we did have an edge there. Like, we were sitting there, we were watching it. I saw the number. I said, yeah, that's bad. We could have taken a risk on it. I think that it would have been a little bit. I would have been going a little bit on a limb to go short there, but like it would have paid off big time, wouldn't it? June is saying 55% chance that they cut. Wow. Who can say? I've never seen the market contradict the Federal Reserve itself so adamantly.
Intelligence, Deutsche Bank 5-year credit defaults.
Did you see the Jeffrey Gundlach thing yet last night? He was tweeting. He said, "Oh yeah, looks like rates are going to go even lower."
9 basis points from earlier.
And he said he was talking about somebody he saw on CNBC, and they were saying that the Fed was being quote unquote defiant. As though to say everything says that you're going to reduce interest rates, and we really don't believe you. You know, they talk about a credibility problem at the Federal Reserve, and I'm kind of like, well, I don't know if it's really, you know, but when the market is contradicting what the Federal Reserve says that strongly, I think you kind of have to say that the Federal Reserve has a credibility problem, don't you? Yeah, don't fight the Fed till the Fed is not in control in less than a week, right? Now that said, so those probabilities are almost certainly changing right now with this strong down move. Where are we in terms of like yesterday's level? So we need to come to our 30-minute chart. Okay, so we have still not yet completely retraced the overnight move up. So back to right about where we're at, 116.08. Would be a little bit, but I wouldn't doubt their ability to start running through yesterday's prices as well.
This situation today very different from than in 2007 to 2009.
Well, should I come in here and go long rates so that it will reverse? You know it, right? It really does seem like that's what this is. You know, this is a spot where I am like seriously considering, you know what, I will do it on sim. Why the hell not? A reversal is not anticipated. We'll see. But what I did is I went long so that it'll keep going, right? Because I would like to see rates rise. If the move index moves up once more, it will be pure panic. You know, there are definitely the certain points that the move index could get to that could trigger, like, what do they call this? A VAR shock. A VAR shock. At what point does that produce another VAR shock in the treasuries, and like the liquidity just really goes to shit? If stuff hits the fan, next week would be the perfect one. End of month is Friday, and the end of quarter inflation data. Yeah, exactly. Well, that's what I was trying to say at the beginning. Is like, okay, it seems to me like there's a reflexive trade going in here. You come in, you short a certain bank. Everybody goes, oh no, that bank must be in trouble. I need to pull my money out of it. So then all of the rich people go and pull their money out of that bank, right? And then you know, it just pushes the stock down further. And then the whole market freaks out. Interest rates get reduced. Everybody that spot the treasuries are doing well. And then the interest rates going lower kind of like sparks more fear. It's that part is probably not part of the reflexive trade, but it's just funny to see the rates go lower. Anyways, so if you've got that loop and it just keeps going and going and going until it's like kind of ended, what could stop that loop? Well, one thing that could stop that loop is them coming in and insuring all deposits. If they insure all deposits, then there's no longer a reason for you to pull your money out of the bank, and that destroys one half of the reflexivity, right? But I think the other one would be a large enough shock the other way, and a large enough shock the other way would be really inflationary data coming out, right? If we got some really inflationary data hit that pushed interest rates up significantly the other way, that would just devastate this market, I think. So I think actually is right. Like, if this next inflation data comes out and it's bad, market's gonna have real problems. Okay, I think I was a little bit too early here because they're gonna go a little bit lower. Flat.
So
Hmm.
US January wholesale inventory is revised to minus 0.3% when it was previously at minus
The
0.4%.
same thing is going to happen. Well, I have to say that I'm quite shocked that with everything that's going on, that the stock market is still at above 3.95. 395 is like to be anywhere close to 4,000 just still seems kind of crazy to me. Because I'm sitting here like, why are we not at like
US January wholesale
3,800, 3,700? Like,
9% when it was previously at 1%.
but then at the same time that I'm like, oh, we should be at 3,700, and that 3,700 seems like a reasonable downside target in near side. That it seems like a reasonable near-term downside target is also just shows you how insane this market really is, right? Oh man, like I puked that hard and it bounced. I'm gonna try it again. Yeah, there's an iceberg there, but that's going to cause them to slip a little bit, isn't it? Oh, okay. Okay. Hmm. Oh, you hear the alerts? Oh, I shouldn't have that on, Trading Bunny. When that happens, don't tell me. So you can keep hearing it. That was Financial Juice. Link in the video description below. It's like $100 a month now, I think. There used to be a lifetime license that you could get. I don't know if they do that anymore, though. Well, I like it because it helps me know. Yeah, there's a reason it's worth $100 a month. Yeah, because what happens is I mute it. I unmute it so that we can hear when there's like a press conference or something. Because basically the way that I have my audio set up is I have all of the audio coming from a web browser goes to a different channel. So, yeah. that worked really well. Wait, how many did I end up having in the end? Okay, 4. I kind of wish I hadn't puked the original one, but that's okay, I guess. Checking Twitter here, etc., etc. You guys must be deep in trade because it was like all of the sudden everything got really quiet. So my thinking here is, yes, that news was bad, but I think that these guys that have been bidding things up are just going to look at that as an opportunity to reload. So that pullback was pretty extreme, wasn't it? I should reset the DOM here because there's definitely some sort of a node forming here. I don't know if that's a pause and that it's going to come back up, or if they're going to go for another test of the lows. Oh, did it snow again today? Yeah, so did you see there was like 07, there was like a really big bid for a moment, and it went through, and like I panicked and bailed and everything, but then it turned, that's like what caused it to turn around. Like it found support right immediately after that bust. I find that I don't know how you can predict when that's going to happen, but that's a pattern that we maybe you can't predict that it happens, but that's a pattern that I see a lot that seems to screw you over, right? Like you get in early, you get in too early, it does that break, it turns around, and then it goes your direction, and so you always miss it. Now, I really must be super ADHD right now, because like my mind is already going to, oh, what are some things I can do? You know what I really want to do is I want to try and make an AI stream assistant, because I've seen these streams where the stream is just people asking questions to the AI, and the AI like answers voice chat, or sorry, answers the chat's questions and stuff. And I'm like wondering, can you do that together? Like you have a live person and a robot doing that? How do you do that? I think I have the skills to figure that out. I think it would take me a lot of work, and there'd have to be a lot that I have to learn, but I think I have the technical skills to work something like that out. But there's also, I've been doing a little bit of music, and well, let's see here. Hold on a second. Guys, I don't know. I don't know if this just started or if I just never looked outside when I woke up, but there is already like 3 inches of snow on the roads out there. What the It's really gigantic snowflakes too. Oh man, because I just saw on Twitter somebody saying, "Oh yeah, this school district is saying, give yourself plenty of extra time and yada yada yada." I'm like, why? Wait, what's going on? Why? Oh yeah, it's snowing. It's snowing. You were shocked to see this morning. Well, I'm like this is how unobservant I can be sometimes. This is the weirdest thing. An ADHD person will miss like the most stupid, obvious things, but then let's not call it an ADHD thing. Let's just call it a Seth thing. I mean, it's because of ADHD, but it's more interesting. That's the thing about Seth. Seth will miss the most obvious stuff sometimes, but then the things that everybody else misses, Seth will catch. What's with that? It's so weird. It's so weird. How did I not see the snow out the back window while I was eating? So it was too dark, or maybe it hadn't started yet. I'm really shocked how much snow is out there. Okay, 90% today, 40% tomorrow. Okay, so, and 36. So what that tells me is that I'm not going to be out trying to fix the lawn up tomorrow. That's what that tells me, first of all. What? Okay, I just heard something over the news squawk that I need to check. Some stock news here. Okay. So here's Deutsche Bank. Looking pretty nasty. but recovering from its worst from the overnights. But now I'm hearing shares of Silvergate is are jump. Ooh, wow. Whoa, what the fetch? How is that happening? Holy crap. Today's option expiration too, isn't it? Oh man, oh dude. Oh, let's come in here and look for a second. Oh. I bet you somebody made a massive. I bet you go on Reddit. There's going to be somebody that had calls in Silvergate. Oh man, that looks like a nutso one. Oh, up 50%. Yeah, today is the third Friday of the month. Can you believe it? Yeah, the third didn't count, so it's 10, 17, 24. It's options expiration today. In fact, isn't it a quad? Or no, was that last? Maybe that was last week. Maybe I got it wrong. Hold on. I have to. No, yeah, Lucas says no. I think I actually am wrong. Because I pulled that up and I was like, oh wait, yeah, actually if the first week does count, then the options expiration was actually last week. Okay, it was the 17th. I trust you guys. Ooh, I got filled. Well, I think I just hold that one. I want to see if there was a really ability, because I'm wondering, okay, from 107 to 161, with the deltas that you're probably seeing, would that actually have been that much money? Okay, I just heard over the news squawk that Feds Bullard says that it would be a disaster for the U.S. to abandon the 2% inflation target and that it would send the world markets back to the 1970s. That was a pretty strong repudiation of this idea that they're going to have to increase the inflation target. I'm going to minimize that for a second. And I'm going to look over here on my other screen. Actually, I'll move this over to this screen so that you can kind of see me looking, so that you're not looking at the back of my head. Okay, where is my options chain? I close that one. Okay. SI. Silvergate Capital. So yesterday they were at 1.12. Oh yeah. You could have been in. I'm gonna bet that you could have bought like $1 calls for probably 10 to 20 cents, and the offers on them right now are 0.95. That's for the weeklies though. If we get rid of all of the weeklies and we go to April 2021, or April 21st rather. Oh yeah, dude. Ah, that's so funny. Look at that. Okay, so somebody sold calls there, and like I said, they were probably worth what? Well, actually, they were probably more like 50 cents. Still, somebody sold a ton of them, so somebody is hurting from that, but probably not going to be like one of those I made $1 million sorts of trades. Set it at auto. Set what at auto? Oh, how do you set a stop in Jigsaw? I am trying to left click is not working. Oh, yes. Okay, I will explain this to you. So you press the little $sign button and you get this little trade window and you have a couple of choices. So if you set it to stop and then wherever you click, it will set you a stop. So if I click up here, it'll set a stop. If I click down here, it will complain. It will reject it. Okay. If you click auto though, it kind of changes what kind of an order it puts. So if I click below the current price, automatically puts a bid. If I click on the bid column above the current price, it automatically sets a stop. Oops, sorry, I have to scroll up a little bit. Automatically sets a stop, right? So if you just set auto, right? So the only time that I would ever change it from auto is if I really want to be sure that I'm using a limit order. Because what can happen to you sometimes is like, say right now I'm trying to catch the edge. I want to buy it at like 14.5, for instance, right? Or let's say I want to buy it at 15. Okay. So I want to hit into it at a market order with 15, or now it's 14.5. Okay. So I click it just as it goes and I'm a little bit late. So it sends it as a market order, but then it goes, oh, the best price is 15. So then I hit 15. That kind of sucks. So if you send it in as a limit order, then you know, if you miss it, it will just go as a limit order at 14.5. And that's why I would change it. That makes sense? So if you're trying to catch the edge, I would recommend clicking limit. Oh, you just took a clip of this one explanation. I mean, I think I've explained this in a couple of the different videos, though. I don't know. See, the issue is not just finding a piece of information that would be useful to the YouTube audience, because there is so much information that we cover every day that is useful to the YouTube audience. The difficulty is creating a thumbnail and using that information to create a thumbnail and a title that people will click on, right? So if I say top 20 jigsaw trading tips and tricks, that I can kind of stick that kind of information in there and people will click on it, right? So let's do though, make note of that. And now I'm gonna put when to use auto versus limit order. Volume stops is the other thing on there that you kind of might want to be aware of. Top 20 jigsaw tips, and yeah, because I mean I did that one with NinjaTrader and it worked really well. Yeah, here's the thing that I think is kind of funny about all of that is that I said, okay, well, we definitely are doing well. We have like a really good suite of tools to use with NinjaTrader. And NinjaTrader is a platform that's growing in popularity. So we should make a video about the top NinjaTrader tips and tricks, right? So we did that. It's doing really well. I don't know if we got too many. I mean, I get like maybe 1 or 2 people buy the indicators a month. It's not like super crazy popular. Maybe I need to like buy ads for it or something, but I don't know what I would put in ads that would like really convince people. Anyways, so I do all of that. And now because of the way, like because of NinjaTrader 8.1 and the way the NinjaTrader brokerage is going and everything, like I'm kind of moving away from that. So it was like I made a really, really good long-term investment. And then as soon as I made it, I want to pivot from it. It's like, what the hell's up? Maybe I should just double down on it. Maybe I should just be like, okay, we are NinjaTrader everything, going back to NinjaTrader brokerage, doing the, you know. I want to try Quant Tower. What? So tell me, Joe, because I've seen a lot of people say that, and I'm not sure what it is about Quant Tower that seems to attract the interest other than maybe like it's another platform that's pretty inexpensive for you. Lucas, I mean, yeah, that's what I'm saying, Lucas. I think that NinjaTrader, the platform, is really good. Okay. I don't think that execution on NinjaTrader is great. I don't think that if you want to scalp, that NinjaTrader is very good. But for what most people want to do, or are trying to do in trading and everything, and they're all putting charts up and all this kind of, and they want to execute on the charts, like NinjaTrader is like the best for that kind of shit, right? And the moves that they are making make a lot of business sense to me. Having your own clearing firm, having a web platform, turning this into like a straight up a Robinhood sort of a thing. Right? Like this is what like wigs me out about it, right? So I was thinking about this the other day because Anthony Crudelli, I don't think that Anthony watches my videos. Sometimes I'll have been saying something that day or the day before, and then I'll see a video pop up on Anthony Crudelli's channel that, you know, it's like the title was almost like he was watching my stream and was responding to me. I don't think that that's actually the case. I think that what actually happens is he's just so good at knowing what sort of things traders are talking about and dealing with that he makes a video that's like with the right title and everything, right? Like he's really good at that. He's secretly stalking. I wish. I really like that guy. I have to say, like, I don't agree with everything that he says. But I think he's like 10 times better than most of the influencers out there. And he has like real experience. I mean, he's been in there. He's got connections. I got to tell you, there are certain things that he and like from a perspective of a creator, because like look, we're competitors, right? We're competitors. There are certain things about Anthony Credelli that I will never be able to compete with. Just straight up. He's so good at this. He's really good at that. So anyways, and when you look at the videos that he's making, they've got like NinjaTrader branding and all of this stuff. So it used to be that he was on with TradeStation, right? And now he's on with NinjaTrader. You see? He's not that huge of a channel. He's only we have about 10,000 subscribers. He has about 16,000 subscribers. So it's not like he's huge. But he's better at it than me, I think. Period. In all honesty. So he's all in on the NinjaTrader thing, right? Like think of it from a business perspective, right? Which is the platform that is most likely in the futures trading arena? Which is the platform that is the most likely to experience significant growth in the next 2 to 5 years? And I say it's probably NinjaTrader. Which, doesn't that just seem so paradoxical? Like I can just feel Lucas sitting there cringing at me saying this, because I know that he feels the exact same way that I do about NinjaTrader. It's like there are some really, really great things about NinjaTrader, and that's why you're going to see so many people go over there and that platform is going to grow. But there's just a few little things that they're doing that to people like me and probably a lot of you guys really, really don't like. And so it's like, we don't want to be on NinjaTrader. You know? The graphics are important for the eye. Well, I think it's a lot more than just that. Like, was I really... Why does it say my average position is 09? Okay, whatever. No, we're talking about NinjaTrader. We're talking about NinjaTrader. There's a lot of things that NinjaTrader's doing that I think it's probably going to be one of the highest growth platforms over the next 2 to 5 years. But there's just a few things that they're doing that I really don't like and that Lucas really don't like. And so like I just find NinjaTrader, I find it really hard for them to be my broker right now. Like that's just when I did NinjaTrader, I had to go through the bridge if I wanted to make it so that I could connect to NinjaTrader directly with Jigsaw. They were going to have to do something, and I think they wanted to charge me a fee. When I did have problems, I wasn't very happy with the support, like all of these sorts of things, right? And I can't use Rhythmic. If I could get Rhythmic data through NinjaTrader or real CQG, not Kinetic, or not Kinetic is the one that's okay. It's Continuum. Ugh. I was not a fan of Continuum. Right? Yeah, and then their execution is not very good. Or to be more specific, their DOM is not very good. I guess if you're using Jigsaw to execute, you're going through the bridge, it's fine. But the Continuum is not the same as CQG. Yeah. They're run by CQG, but it's not the same data. And my experience has been that it is not as good data. Not quite happy with how that's going, but we'll just see. I used Continuum, but didn't have any problems that I am aware of. I don't think I ever had any explicit like issues with Continuum, as much as it was that it just wasn't as good as the Rhythmic data. So, hey, what you gonna do? try Sierra charts for a month. but do you see what I'm saying? Like, for me as a creator, probably the best thing is to double down on NinjaTrader. But in terms of like what I want for my trading and what I think works best for what we're doing, I'm starting to move away from NinjaTrader, and it's purely because NinjaTrader is becoming such a closed platform, right? You have to use their broker, you have to use their clearing, and now it's like I was kind of using a little bit of a hack, right, so that I could use Rhythmic for NinjaTrader brokerage. And no, not so that I could use Rhythmic. So if in my license I have Rhythmic for NinjaTrader brokerage as an option, I guess if I contacted NinjaTrader and they said that we offer Rhythmic through NinjaTrader clearing now, it would be different. But when I talked to them before, they couldn't. You didn't. So okay. PineScript is okay. Yeah. You know what? Like, TradingView is really the best web charts, but I kind of have some issues with PineScript. You guys are making your guys are pulling me off onto all sorts of tangents again. I need to stop doing that. Okay, my issue with PineScript is that the kinds of fallacies that you run into with backtesting seem to be really easy to fall into with PineScript. Like, almost every backtest I've ever seen people do with PineScript is flawed. Anyways, I digress. Okay, so from a creator perspective, it seems to me like NinjaTrader, well, I mean, I could be dead wrong. It could be that these issues that NinjaTrader Web is having and all of that are just such a big problem that it completely destroys NinjaTrader's reputation and nobody goes over there anymore. But it seems to me like they have a lot of growth potential, because if they become the Robin Hood of futures trading, because that's what everybody's working towards, they become the Robin Hood of futures trading, there's going to be a lot of people coming from that. Right? Okay. So what do I not like about them? I don't like the closed platform. I don't like that I can't use the data that I want. I don't like that I can't use multiple platforms together in conjunction, or that they're making it harder for me to do that sort of a thing, right? So then you say Sierra charts. Well, so it seems like with Sierra charts that would kind of work. Actually, does the bridge work with Sierra charts? Hold on. I don't know if the Jigsaw bridge even works with Sierra charts. I think that I would have to, how do I do this? Where would the documentation on this be? Tell me. The Sierra charts does have a better base of indicators. I wouldn't say that's entirely true. I think that NinjaTrader, if you buy the full license, is on par with it. I don't think that the bridge is actually supported with Sierra charts. So I don't think that you can use Jigsaw and Sierra charts together, can you? That's not true, Khalid. Let's pull this up, because you guys always say that, and I think that that's because you all get the same package and you don't realize that not everybody gets everything. Okay, so there's a base package The following data feeds can be used with the base package: Sierra Chart Forex and CFD, real-time data enabled through the Sierra Chart exchange data feed, Sierra Chart market data statistics, cryptocurrency, delayed streaming exchange, and simulated trading. Okay. And it includes all functionality of the software except what is in the advanced features section. So what is the advanced features? TPO charts, numbers, bars, market depth, historical graph, and volume profile interactive drawing tool. So basically you want TPOs and volume profile, you have to pay for the advanced features. Okay. So what is the difference between them? It's about $10 a month. So you're paying $25 a month for the platform versus $36 a month for the platform, right? By the way, that doesn't include the better data, right? So if you want integrated data, which I think is 11, includes external connectivity along with the same features as the integrated standard Sierra Chart service package. Okay, so basically, if you want the package that would be equal to what you get with Jigsaw, it's $46 a month, which is what you pay for Jigsaw. So Sierra Charts is not actually strictly cheaper than the Sierra Charts are more flexible on what you want to pay per month, but it's not actually explicitly cheaper. I mean, it's like $4 cheaper than Jigsaw, right? Except for that, the difference is you only have to pay the monthly fee, whereas with Jigsaw you have to pay $500 upfront too. That's the difference. There's a difference. Right? So Sierra, it's a little bit more nuanced than that, right? But here's the thing, going back to the thing. So like if Seth went to Sierra Charts, right? What does Seth not like about NinjaTrader right now is that I'm being forced into their ecosystem. Well, guess what? It's the same thing with Sierra Charts. You have to come in. Yeah, I mean, you can pick your own introducing broker, but you still have to you're still going to end up using their Denali data feed and all of these other things, right? So at what point, in my opinion, it is inevitable. It is inevitable that Sierra Charts clearing firm gets created and then they go the exact same way that NinjaTrader goes. I bet you it happens. I bet you it happens. The only platform I see out there that I'm really confident, let's not say that I'm really confident. I'm going to say that the last one that does it will be Jigsaw. Maybe at some point Jigsaw has to do it too, but I'm going to bet you that the last one that like goes that whole thing and just tries to create their own complete ecosystem will be Jigsaw, because they kind of like being independent. But at some point, the business case may just be too strong to ignore. Looking at Discord here. I want to clean Discord up. Hold on. So, what does Seth do? What I think Seth does is he just switches to completely using Jigsaw. Actually, I think that as long as I can continue to use NinjaTrader 3.8.1, I forget which the version is, I will continue to have the NinjaTrader charts up here. And if NinjaTrader becomes really popular, I'm still gonna support it in the way that I can. It's just kind of like, it'd be a lot easier if I was actually trading with them. You know what I mean? and for a lot of people, the NinjaTrader setup makes sense. It really does. I think one of the things that we do in the trading community, especially us, and I mean like me and the kind of person that wants to come to my channel, is we kind of make this thing that like what was the correct choice for me ends up being the correct choice for everyone. And if I'm using Sierra Charts, I want everybody to use Sierra Charts. If I'm using NinjaTrader, I want everybody to use NinjaTrader. when the reality is that it is so difficult to differentiate yourself in this environment. Every platform has something good about it and makes sense for a certain type of person. Every platform has a benefit that makes the most sense for a certain person out there, right? And I like NinjaTrader and Jigsaw because those are the ones that I think are fit best, that provide the best tools for the kind of the information and abilities that we have as retail traders. And so those are the places that I would more likely go, right? And the only thing that would get me to be like, oh man, there's this new platform and I really think that we should go and switch and go to this other platform, would be a platform that was completely geared towards quantitative research and allowed you to program things in both Python and either C, C#, Rust. Like a really fast performant language too. But that it had the most of the stuff was done with Python. Man, that trade that I did worked really well, didn't it? Like that second leg of it. In fact, I think what I'm going to do is I'm going to take the last one off here. Okay. Now it's like they would have to go well below my original position in the day's low in order for me to lose more than 1,000, which means that I can very easily keep this sim position long over the weekend. Don't you think you could exploit this quant approach better in options than in futures? Maybe. It exists and it's called TT. Does TT let you do Python? Okay, there is something that is kind of, it looks like a hack. Let's see. To support integrating Python with a TT.NET SDK client. Wait, is it run on .NET? Download the SDK, import the DLL into your code. Well, I think that's probably what I would do if I was making my platform in Rust. Maybe Trading Technologies does do it. You know, from that perspective, it kind of makes you wonder why other platforms haven't made similar plugins. I would have to look at it in a little bit more detail. I think that it would not just be giving me the Python SDK. So what are their backtesting tools like though too? That's kind of the other question. Is I would want to have, because like the NinjaTrader backtesting tools are pretty good, but I think they could be better as well. Like for instance, there's nothing in there to really tell you like how it's actually managing the data. You can tell it only use local data or not, but it doesn't tell you like this is what I downloaded and this is the data set that I used, and managing them over, you know, there's just not enough control over it. How much is TT? Yeah, their pricing structure is not clear. I think that it's like there's versions that are $50 and there's versions that are like $500 of TT. Oh, actually it says it's $15.75 a month full suite plus some add-ons. Yeah. But they have ones that you can do that are like $50 a month or something, I think. But like I said, they don't make the pricing clear on their website, and it's been a long time since I've spoken with them, so I don't know. Maybe I should talk to them about it. I'll tell you what, let's write that down. You guys remind me. There's my... What should we do this one? Should be orange. I'd have to look at it. If it's like $50 plus the CME data feeds, then no. But if it was like $50 and I get Trading Technologies feed and I can do the bridge or whatever the deal is so that I can still use Jigsaw, then maybe I would do it. But I will contact them and I'll tell them, you know, I have a YouTube channel. People are asking me about this, and I know that your pricing isn't very clear. So could you give me some more information so that I know what to tell people? You pay commissions with different caps. Sure. They're going to go higher. They're making the move. I'm still happy with taking my one contract off there. Is 8 monitors okay? How many do I need to be profitable? You only need 1 monitor to be profitable, my friend. I have 3 monitors, and if I wasn't doing the stream, I could probably fit it all into one. I keep some elements on my screen really big so that you guys can see them on the stream, but... Like, here's my issue is that if I'm going to do TT Pro, that, you know, at that, if I was able to afford TT Pro, I know that a Bloomberg terminal is a lot more than that, but, you know, the amount of success that I would need to be having with this for me to justify spending that much, I would want to have a Bloomberg terminal too. And like, you know what I mean? Make sense of your removing size. I really think that the people that use TT are like CTAs and stuff, right? I mean, this is the thing that wigs me out, and actually, you can correct me if I'm wrong on this, but it seems to me that there are many CTAs out there that what they do is more simple than what we're trying to do on the stream in many respects. There's some of these guys that they are literally just executing on a momentum strategy, buy the futures that are up the most, and they manage it that way. And their actual execution needs are not really as sophisticated in terms of like making quick changes and all of these things, and it's more about just being able to manage the number of orders that they have to do. Yep. Most of the CTAs are just Momo. Yeah, that's true too, Lucas, isn't it? There's that auto spreader feature, right? Well, we could look at it. Between a week to a quarter, Momo largely. But what do you think? So if I want to go into something a little bit more professional, what should I do? Should I just go and get a Series 3 and do Momo? Or should I do something different? Should I try and run a long short treasuries fund? Momo means momentum. So the way that a momentum strategy generally works is like at the end of the month or the end of the quarter, I look at which instruments. Maybe I have like 20 different things that I'm looking at, and I say which ones did the best in that time period and which ones did the worst in that period, and then I'll go long those ones and short those ones. Long, short, what do you mean by if you want to be taken seriously? Trend follow if you want to make some dough regularly and keep your client happy. I don't think that I want to be like, okay, I'm not sure that I'm trying to become Jeffrey Gunlock, right? That would be the thing, is like just the whole portfolio, and yeah, we specialize in the treasuries, but we're invested in all sorts of things, and I don't know if I'm sophisticated enough for that yet. Maybe I am more of that just make some dough regularly and keep my client happy. Long short is the start of that relative value circle jerk that banks drool over. You can show that and get oh right. Like you're saying if I make a fund that is long short and then I outperform that year, then all of a sudden money starts coming in, right? Because here's the problem, is that if I start a fund, I think it'd be very difficult for me to get capital. Like in terms of like having the connections and convincing people to do it and all of that sort of thing. That's why I don't think that I'd be good at that. Maybe I find somebody that is and can work that, but why is meta stock going up by so much? So the tech stocks have kind of become like a flight to safety sort of asset. Oh, they're not up by that much, but during this time period, they had like one earnings that was really good, and then it's kind of turned into like, as the market's falling apart, tech have become a flight to safety asset, which is kind of funny. But if you have some private clients who trust you and are willing to give you money, Momo is better and less of a headache. I guess the question that I just asked you is a little bit too far ahead. I think that I need to study more about these kinds of strategies. I need to finish my machine learning book, and then I need to do some book and some research and like do some actual quantitative research myself on momentum strategies and stuff. Cause I don't know, man. Sometimes I feel like I'm a god and I just know exactly what the market is going to do and I'm right every time. And then I get humbled and I feel like I know nothing. And I'm maybe too hard on myself when that happens, but it makes me really nervous trying to make those kinds of decisions with other people's money, right? Like if trading and losing $100 in a day stresses me out this much, how can I do that with other people's money? You know what I mean? But and the reason that I want to do it isn't because I'm looking for more money. I mean, I guess managing a fund is kind of a gateway into like being super rich, right? But it's not that. It's the challenge in what I think I might learn from doing that sort of a thing, right? Is I feel like that because I am cut off from the professional world, that kind of limits my progress. You know? Like, I keep having fantasies when I'm daydreaming and being ADHD. I keep having fantasies about working for a big bank again. It was like I was saying yesterday, like sometimes I get bored. And it's not because I don't enjoy trading or because it's not working out or anything like that. It's just like my brain likes the novelty. And I feel like that there are certain that there's this whole world of knowledge that I'm not getting, that I want to know. Do you care about money? You never get a good trader, is something someone said. I do have ADHD. You make money between feeling you know nothing and feeling you know everything. I do think that this feeling that you know nothing is a useful thing, because every time that I feel like I know everything, it's like you screw up. You'll become overconfident, you stop developing, you miss, like something will change and you miss it, and then you find out later and you're like, oh my gosh, I'm so far behind, you know? They've pretty much always known TC. My parents always knew from when I was a little baby, and so they were like, oh, we'll just go with it. But by the time I was in second grade, they're like, yeah, we gotta do something about this. So, and seeing my son, I don't know if my son is as bad as I was as a kid or not, but like my son right now is like, okay. Like I was interviewing with this guy the other day. I don't know how that one ended up, but I did speak to somebody and they were a big skier. And I was like, oh man, I want to go skiing again. I might go next year. Maybe the kids will be old enough that I can feel comfortable leaving them with my wife at home and I can go skiing by myself. And he's like, well, you know, you can take the kids skiing too. You know, kids can ski as little as 2 and 3 sometimes. And I'm like, not this kid. You don't know this kid. He can't ski. You know, Ewan Sinclair is very fond of saying, well, you are balancing your deltas and gammas and backing the RF. Some doofus is making bank, buying the front and selling the back. Well, I'll tell you this much. I have a Series 65. I intend on getting a Series 3. And if there's something that we can do that really has good backing and makes good business sense, we'll do it. We'll do it. If you're into machine learning, look into a KNN class. I think I've actually heard of that before. I have to look. I really need to finish this book. I don't think it's going to happen this weekend, though, because this weekend I'm hoping that we finish that desk, or at least the wood part of the desk. So that'll be nice. Okay, guys, I got to get going. I will see you on Monday. It's not a standing desk, but it is a really crazy, I think it's birch, and we've just put a lot of work into it. I know it seems like it's crazy that I've spent like weeks and weeks on just this one single piece of wood, but we have, and it's really nice. So Seth Capital. If you guys have ideas for names for our fund / investment advisor firm, let me know, because right now it's Gainward Capital is the best one that we have, and I'm not even sure if that one would actually work or not. But I gotta go. I'll see you guys on Monday. Stay excellent.